total deals valued at $456 billion, according to Refinitiv. Let's talk more about the M&A landscape with Greg Lemcore, co-head of investment banking at Goldman Sachs, which is hosting its 9th annual Builders and Innovators Conference. Greg, great to see you. Thanks so much for joining us.
Well, good to see you as well. Thanks for having me.
Looking forward to talking about the Builders and Innovators Conference, but let's start with some of that data on M&A. Listened to the earnings call yesterday, and Stephen Scher in particular was not just bullish of the quarter just passed, but the pipeline of various different types of investment banking activity to come. How busy are you expecting it to maintain, and how long can that last? What key factors does it rest on?
Well, the markets have been incredibly busy, as you saw in the results yesterday from us, and I think across the industry. Very strong underwriting revenues in equity and in debt. Relatively light M&A revenues because there's a lag effect of when deals happen and when they close. What's been amazing about the M&A market is back in March, April, May, there was no activity. It was down 85% and it was completely dead. We started to see activity pick back up in the third quarter and pick up meaningfully in September. September was our record September ever, with $473 billion of M&A announced in September, and that's continued through October. And so I think where you heard Stephen's bullishness is the transactions we've seen get done and what we see in the pipeline. But after taking a little bit of a pause, strategic activity has picked up significantly over the past few months.
And what about IPOs? Is that looking as positive as well?
Well, the IPO market has been incredibly hot. Again, it's amazing to see how quickly things change. If you thought back to March, I don't think people expected we'd have an IPO for 2 years. And we're now going to see a record for IPOs in 2020 of all time. We've raised $200 billion in the IPO market to date. And it's been an interesting mix. It's been an interesting mix of growth companies, companies like Unity and Snowflake that have taken advantage of the market's desire for growth. And then we've seen a significant pickup in SPACs. And so the SPAC market has been about 50% of M&A volume. And so those two combined have driven a massive resurgence in the IPO market as investors are really searching for growth in a low interest rate environment.
Greg, it's Sarah. It all feels a little disconnected from the real economy. The IPO boom, the SPAC boom, the M&A boom. Explain what is that signaling? Is it signaling that investors have and that executives have confidence, or is there pre-election rush? But why is it all so disconnected?
That's a great question, Sarah. It's a bit of everything. I would say there's been massive central bank stimulus that has really helped the markets. I think one of the big stories of this whole pandemic has been the resilience of the capital markets. In that period of March, April, May, the amount of capital that was raised by the most distressed companies was staggering. You saw Boeing raise $25 billion. You saw airlines raising money, online travel companies, restaurants companies, cruise ships. And so the markets were quite resilient in raising capital to help sustain the business models of companies that were challenged. And that put a lot of confidence in the equity markets. And as the equity markets rallied, the IPO market opened back up. And as investors are seeking growth, they've really chased after IPOs where you see significant growth and the option value of being invested in SPACs to try to get more transactions.
Shepard Smith here. Thanks for watching CNBC on YouTube.